Backdooring money into your Roth IRA is a straightforward process that allows high earners to make Roth IRA contributions every year. You heard that right. You are effectively allowed to contribute up to the limits to your Roth IRA each year, regardless of how much money you make. It is very important that you understand the details of this process before taking advantage of the backdoor. The process can cost you unnecessary tax dollars and sometimes even penalties if done incorrectly. In this video, I'll cover all the information that you need to make the backdoor Roth IRA process a breeze. But first, if you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. And if you enjoy videos like this, please do me a huge favor and hit that like button, subscribe if you haven't already, and tell a friend about the channel. It helps extend my reach of this channel. I just want to help as many people as possible, and I really do appreciate you. What is a backdoor Roth IRA? A backdoor Roth IRA is not as fancy as it sounds. In fact, it's not even an account at all. It's a strategy that enables high earners that are disqualified from making regular contributions to their Roth IRA fund the Roth IRA each year. You do need to be careful before using this strategy. It can have some serious tax implications that will blindside you if you don't understand the details of the process. And this strategy is not recommended for all high earners. It really does depend on where you currently have your money invested. Why fund a Roth IRA? Roth IRAs will help you build tax advantage wealth compared to a taxable brokerage account. The contributions that you make to a Roth IRA initially are no different than contributions that are made to a taxable brokerage account. This is money that has already been taxed at your marginal tax rate in the current year. Now, what sets the Roth IRA apart from the taxable brokerage account is that you will never pay another penny of tax on the money that is in the Roth IRA. Investments within the Roth IRA grow tax-free, so this includes all price appreciation and all dividends paid. And when you take the money out of the Roth IRA someday to use it for any reason, you will pay $0 on that distribution. In summary, after paying the initial taxes on your contributions that went into the Roth IRA in the year that you put it in at your marginal tax rate, you're down the home stretch tax-free forever. You should never pay another penny, as long as you don't pull the money out early and get assessed penalties on it. Roth IRA income limits. Let's jump over to my screen to check out the income limits. This table shows the Roth IRA income limits for 2022 and 2023. So I'm going to focus on the 2023 income limits. And so filing status is over in this first column. So if you're single or head of household and you make more than $153,000 a year, you are not allowed to contribute to your Roth IRA. If you're married filing jointly and you make $228,000 per year, you are not allowed to make any contributions to your Roth IRA. And if you're married filing separately, if you make more than $10,000, you are not allowed to make any contributions to your Roth IRA. Roth IRA contribution limits. In 2023, the contribution limit for a Roth IRA is $6,500, and you can do a catch-up contribution of an additional $1,000 if you're 50 or older, or if you turn 50 in that calendar year. Roth IRAs have no age limit. However, you must have earned income for at least as much as you contribute into the account. So if you want to do the full $6,500 or $7,500, depending on your age that year, you have to have earned at least $6,500 or $7,500 for the calendar year. And a non-working spouse can also maximize their spousal Roth IRA account. So if you're married and one of you works and one of you stays home, you're both able to separately maximize your Roth IRA as long as the person working has the income to cover the contributions. When not to use the backdoor. If you carry a balance in a traditional IRA, a SEP IRA, or a simple IRA, you will run into what is known as the pro rata rule if you try to backdoor money into your Roth IRA. This rule prevents you from being able to simply convert the after-tax contributions from your traditional to your Roth IRA. For example, let's say you have a traditional IRA that has $93,500 total in it of pre-tax contributions. Now, this could have been from a 401k from a former employer that you rolled over to your traditional IRA, or it could just be that you've been making your pre-tax contributions each year to your traditional IRA and years past. In 2023, if you were to put $6,500 into your traditional IRA and then you were to backdoor it into your Roth IRA, you would be proportionally taxed based on the pre-tax balance percentage of your traditional IRA. So in this scenario, you would now have $100,000 in your traditional IRA. You had the 93.5 pre-tax dollars that you had put in previously and the new 6,500 after-tax contributions that you made that you're going to attempt to do the backdoor with. So 93.5% of the dollars were already in your traditional IRA account as pre-tax contributions. So this means when you do the backdoor on that $6,500, you're going to pay your marginal tax rate of your current income. And if you're a high earner, that's going to be potentially 37% on 93.5% of the $6,500 that you're backdooring. So if you're in the 37% tax bracket, you'd be paying $2,249 of taxes for doing the backdoor with that $6,500 that is now in your Roth account. You were taxed at 34.5% on this backdoor. So I just wanted to throw out an example of how the pro rata rule works. There's a million different situations for this. So if you don't have a full understanding of this process or where your current funds are being held, you'll really want to talk to a financial advisor before attempting the backdoor. And another thing to keep in mind, if you have a traditional IRA that's held somewhere else, let's just say that the Roth and the traditional IRA that you're using to do the backdoor are both in E-Trade, but you have a separate traditional IRA in Fidelity that has money in it, this will count against you on the pro rata rule. It doesn't matter where it is, it's attached to you and your social security number. But a good thing about the whole backdoor process is that your 401k account does not affect this. It will not be used in the pro rata rule, and it will not make you proportionally pay taxes on the backdoor. So you are able to do the backdoor process very easily if you do not have a traditional IRA. And even if you have a huge 401k, you can still execute this process. When the backdoor is viable. The backdoor Roth IRA process is viable for anyone that does not have a traditional SEP or simple IRA. Or it could be viable even if you have one of these IRAs. You'll just have to do the calculations and run the scenario to see how much tax you'd have to eat up that first year, and is that worth all the tax-free future years of contributions. So if you make too much money to contribute to your Roth IRA, if you're over those income limits, and you don't have a traditional IRA, then you are a prime candidate for the backdoor process every single year. I'm going to use my best friend as an example of someone who takes advantage of this process every single year, and it's an absolute no-brainer in his situation. He's well into the 37% tax bracket. He doesn't carry a balance in his traditional IRA. He does have a work 401k plan, and he maxes it out every single year with his traditional contributions to save mega tax dollars for that year. And he is unable to take advantage of pre-tax dollars going into his traditional IRA, because if you have a 401k plan and you meet a certain income threshold, then you are unable to make pre-tax contributions to a traditional IRA. You can't double dip in that situation. And in his case, as the person who has a 401k plan, and he's married, he makes over $136,000. So pretty much anyone in this backdoor situation will fall into that camp. Hence, this is why people use the backdoor. The traditional IRA doesn't help them. There's no income limit on traditional IRAs, but it in effect is no different than a taxable brokerage account basically. Although it's worse because you have to wait to take it out. So he uses the simple steps in the next section to maximize not only his own Roth IRA via the backdoor, but also his wife's spousal IRA. As mentioned earlier, even if your spouse doesn't work, he or she will be able to maximize their own spousal Roth IRA account each year. How to execute the backdoor Roth IRA. Use the following steps in order to properly execute the backdoor. Open a traditional IRA at an online broker of your choice. And of course, you will only have to do this step one time. In future years, you'll already have the account. It'll just have a zero balance each year after you do the process. Make a non-deductible contribution to your traditional IRA account. So this is money that you've already paid or will pay taxes on in the current year. And then you'll want to convert the funds, let's say $6,500 this year, from the traditional IRA to the Roth IRA as soon as possible. Now, there is no time limit for the conversion, but if you make investments and you have little bits of growth, you'll annoyingly owe taxes on them even after the backdoor. So what you really want to do is fund the account, and when it's still cash, right away do the backdoor process and then make your investments. It'll make your life a lot easier because then you never have to pay tax on that money again. And most online brokers make the process at ease if you have both of the IRA accounts with them. So you may have to ask a question to the online broker, but it's pretty self-explanatory when you get out there to execute it. And that's it. If you're a high earner in 2023 that followed this process, you now have $13,000 of money invested that will grow tax-free forever. Speaking of tax advantage wealth, check out this video right here that will show you how to maximize your 401k to make you silly rich. Thanks for watching, and I will see you in the next one. Peace.